afternoon, good evening, traders from across the globe, and welcome to the 1140th edition of Short-Term Trading Live with Oscar and a whole lot of others are in here, and you'll get to see them before this video is over. Traders, we're filming this video on Monday night for Trading Tuesday, Feb 24th, 2014. And right off the bat, before I even tell you that futures trading is risky, I love this green OMNI, and I'm clapping for that bad boy. I have a great video. It should be quick. But in this video, you are going to find out what the answer to this question was. Do you remember we had a little song in our last video? It was like this. One of these things is not like the other. One of these things just doesn't belong. Well, I think I've got it figured out, and you're going to find out in this video. Before we get moving, futures trading can be extremely risky, and I mean extremely risky. It can cause substantial financial loss, but not just your money. You can lose your whole life in this game, so please be careful. Remember that a stop is your best friend, no matter what the interface says. All right, so, traders, here we go. Listen, the green OMNI in the Russell, in the gold, in the S&P and in the NASDAQ is very interesting. You know why? Because one of these things is not like the other. And guess which one I think it is? The bond market. I say the one that falls back is going to be bonds. I think you're going to like what you're going to see in this chart segment. With no further ado, let's go look at some charts. Okay, traders. One of these things doesn't belong. Look at the NASDAQ. If you remember, we were a little bit worried that maybe this was a shoulder and a head and a shoulder building. Well, I haven't done videos in a few days, and we have morphed into something a lot nicer than that. This is one of those Oscar's infamous F flags. And an F flag can be extended for quite some time, and you can just rally in that for a while. And I've got a lot of other markets pointing towards NASDAQ moving higher. So we're in a nice channel here. In fact, there's like a parallel under here. We've stayed above it for quite some time. The only time we had a dip, if you recall, it got through OTAPMA for a day and went right back up. So I say we're going up in the NASDAQ, and we're going up in this one too. Look at the S&P. Very, very promising. If you recall in my last video, I showed you that we probably might run into some trouble because we had this, and these bars weren't above this rung yet. Well, since then, we've gotten above. Very, very promising. Look, we've even gotten above all the previous highs. Right here. You gotta like that, right? So there's more proof that we should move higher. And then we've got this. Now we look at the German DAX. Although it looks like Mickey Mouse, it's actually not. The German DAX is showing you that you've got an inverted head and shoulders with a nice looking F flag sitting right in the right shoulder. Even though you had the one pull back, that's no big deal. And if you want, you can really go nuts and call this a little baby inverted head and shoulders if you really want to go crazy. So lots of bullishness here. Plus we held OTAPMA very nicely, and away we go. Then if you go out to the weekly chart, even nicer. Dow Jones Transportation Average, deemed the leader of U.S. indices during most of the year. Every now and then it'll drop its leadership. But generally this guy tries to lead us around. And what you'll notice here is it always seems to get itself back to the top after hitting the bottom of this, right? Hits the bottom, just about the top bottom. Goes all the way back to the top, hits the bottom. Why not go to that target? That's where it should go. And I think it will. Then there's this. Look at the gold. So it doesn't look like NASDAQ and S&P are the ones that are going to drop out. Gold, bull flag, above the 200 bar moving average. If you recall, you've seen this chart many times. It's in this big, big channel. And back here, I've got 3 or 4 more held signs all the way in the back. So I blew it up a little. Held again, held again, held again, held again. Finally, it breaks out. Gets above the 200 bar moving average, makes a bull flag, gets above the bull flag. That, my friends, is bullish. And it's starting to create a really nice little channel right here. So very bullish, bull flag above the 200 in a nice channel. That means there can only be one market that's going to go down here, right? And the market is bonds, and here's why. 2008, when the crisis began, we have not spent much time under the 200 bar moving average. 34 weeks below the 200 bar moving average. There is no way that is a bullish sign. It couldn't be, because Even in the worst of our times, we couldn't get below the 200 bar. Not at all. The Fed is starting to not buy as many bonds anymore. It makes perfect sense technically that we stay under the 200 and eventually start to break down. If anything peels away, my take is that it will be the bonds, looking at all the charts I've just shown you. Pull your own charts, do your own homework, but I kid you not, right now, gold looks bullish, indices look bullish. That's 34 weeks under something it hasn't been under since 2008. In fact, it hasn't been under since years before that. It doesn't belong under here. It is under here. It's not 1 week. It's not 2 weeks. 34 weeks is not quite a year, but it's pushing on a year. So that, my friends, is set up to start going down, propels our stock market. Gold, gold is a spec market. It wants to go up. It looks bullish. I don't mind it at all. But you can't have bonds, gold, and S&P all going up together. This is the one that very much should peel away. Okay, traders, so there's my take on what should happen next. I expect the bonds to start to peel down a little bit. It doesn't mean it'll happen exactly right now or tomorrow morning, but I expect the bonds to start to peel away. Gold's all right if it wants to go up a little more. It's a bit of a spec market, but it's the S&P and the NASDAQ that I think are just going to keep on going. Traders, do your own charts, do your own homework. Come on down to livewithoscar.com and come join me and my buddies here. Here's my latest OMNI Camp Cruise. A few not on the stage, but this is most of it. Traders, we'd like to say hello. First of all, hello everybody out there. Rock and roll from Omniland here in Vegas. And we'd like to end this video with our Monica here. And we all know what that is, right, traders? Don't forget, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stop starting! Emotions are out! Rock and roll, Vegas 2014. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.